Gold had been plummeting from yearly highs for 5 days in a row. It's a well-traded, high-volume asset, and it's also been a historic signal of crisis and prosperity. But is that still the case? Gold is a U.S. reserve metal, meaning that in times of crisis, the Fed can cash in on its gold and boost the economy. In times of crisis, we've also seen investors running for gold when the dollar weakens and U.S. indexes suffer from high volatility and even negative growth. Thus, it usually trends in the inverse direction of market sentiment and major indexes. Looking at the gold to dollar chart, we can clearly see the inverse reaction of gold to the S&P 500, which itself is a great indicator of the U.S. economy. These days, talk of a rate hike is a huge factor affecting both. A rise in interest rates would mean an even stronger U.S. economy, and that would push up the dollar, causing gold to devaluate. When the previously planned Fed hike was canceled, gold shot up. Since then, a major home sales report has increased chances of a June-July hike, and Fed officials have been speaking in favor of thanks to increased U.S. economic resilience. With markets at historical highs, concerns are being raised about an end to the current growth period. These have become shorter and ended with crashes. And right now, many analysts predict another U.S. stock market crash, although at the moment there are no key drivers in place for such an event. As support for a June rate hike increases, sentiment for gold has been changing from April's bullish to May's bearish. Traders should simply follow major U.S. calendar events, watch dollar futures, and understand that negative PMIs, inflation, and home sales in the U.S. could be key drivers to positive gold price action. Some are due today and some tomorrow. Friday's GDP should be a key driver, especially since that will be followed by a speech from Fed Chair Janet Yellen. Right now, our participants' activity and sentiments are positive, money's on the inflow, and relative strength is neutral. We've oversold to neutral and volatility is medium. Bottom line, neutral. Let's see how that looks in market trends. The long-term daily graph shows convergence around the 1250 mark. On the midterm, we see a weekly downtrend, and we are carving the lower lows trend line. Positive U.S. market data and a higher Fed hike could get gold to test the 1217 support line, and a positive hike decision will send it even lower towards the 1200 mark. Negative U.S. data in turn could send gold to once again test the 1257 resistance level. If successful, we could bear up towards recent 1300 high. Our outlook is long-term neutral, mid-term bearish to neutral, and short-term bearish. That's all for our gold winning tactics today. Have a happy and profitable trading day.